Hello, friends. Today we're discussing something that affects every American who receives Social Security benefits. Many people believe their monthly payment is set in stone and that there is nothing they can do to increase it. Unfortunately, that belief is costing countless retirees and future retirees a significant amount of money every month. There are several specific situations, along with important documents, that can actually raise your Social Security benefit. Some of these opportunities apply to people already collecting benefits, while others apply to those who have not yet filed. In nearly every case, the Social Security Administration does not reach out to tell you that additional money may be available. You have to know where to look and what to check. Today, here on The Frank American, I'm going to walk you through 5 of the most common situations where people may be missing out on higher benefits. I'll explain exactly what to review and the steps you can take to correct problems. Make sure you stay until the end because I'll also provide a complete checklist you can use right away. Before we begin, subscribe to the channel and turn on notifications. Social Security rules change regularly, and when they do, the SSA does not call people individually to explain those changes. Subscribers here often learn about these updates before they lose out on money they may be entitled to receive. Subscribe now, and let's get started. Before we examine each situation, it's important to understand how Social Security calculates retirement benefits. Once you understand the formula, the rest of today's discussion will make much more sense. Your Social Security retirement payment is based on the 35 highest earning years of your working career, adjusted for inflation. The SSA takes those 35 years of earnings, calculate an average monthly amount, and then uses that figure to determine your benefit payment. If you work fewer than 35 years, any missing years are counted as zeros. Those 0 years can have a major impact because they lower your overall average. According to SSA estimates, a single missing year of earnings can reduce your monthly benefit by around $100. That's approximately $1,200 every year. Over retirement that lasts 20 years, one missing year could cost you roughly $24,000. If there are multiple years with errors or missing earnings, the financial loss becomes even greater. Let's begin with the first situation. This involves earnings record errors from the 1980s and 1990s. This is one of the most widespread issues and affects a large number of people currently receiving Social Security. During those decades, payroll reporting relied heavily on paper records and manual processing. Employers submitted paper forms to the IRS, and the IRS transferred information to the SSA. At every step of that process, mistakes could occur. Numbers could be entered incorrectly, names could be misspelled, forms could be misplaced, and entire years of earnings could disappear because paperwork was lost or filed incorrectly. The further back you go, the more difficult it became to identify and correct these mistakes. As a result, many errors remain in the system for decades. If you worked during the 1980s or 1990s, log into your Social Security account at ssa.gov and carefully review your earnings history. Examine every year individually. Compare the earnings shown on your statement with any records you still have available, including W-2 forms, tax returns, or old pay stubs. Pay special attention to years that show earnings far lower than you remember making, as well as years that show no earnings at all even though you were employed. Either situation could indicate an error that deserves further investigation. If you discover a discrepancy, you can request a correction by filing Form SSA 7008, which is a request for correction of earnings record. This form is available free through ssa.gov. Include documentation that supports your claim, such as W-2 forms or tax returns showing the correct earnings amount, and submit everything to your local Social Security office. Processing can take anywhere from several weeks to several months. Once the correction is approved, the SSA recalculates your benefit, and any increase becomes a permanent part of your monthly payment going forward. The second situation involves women who left the workforce to raise children. This group is among the most heavily affected by the problem of zero earning years, and many people are completely unaware of how much it can impact their benefits. When someone leaves a job to care for children, whether for a few years or more than a decade, those years generally produce no earnings record for Social Security purposes. If that person is fewer than 35 years of work before claiming benefits, those years away from the workforce are entered as zeros in the calculation. Imagine someone who worked for 25 years and then spent 10 years raising children. Those 10 years of zero earnings become part of the 35-year average, reducing the monthly benefit significantly compared to someone who worked continuously for 35 years. There are two important points to understand. First, if you later return to work and earn more than you did in some earlier years, those stronger earnings can replace weaker years in your top 35 calculation. Your benefit should reflect those improved earnings. Second, many people don't realize that if they are currently receiving Social Security and still working part-time, the SSA reviews earnings records each year. If your new earnings increase your average, the SSA may recalculate your benefit and provide a higher payment, often retroactive to January of that year. If you have continued working part-time and have not noticed an increase in your benefit, it may be worthwhile to contact the SSA and ask whether your recent earnings have been reviewed and whether a recalculation is currently pending. The third situation affects self-employed individuals, including freelancers, independent contractors, gig workers, and small business owners. This group frequently experiences earnings record problems that often go unnoticed. When you work for an employer, payroll reporting is generally handled for you. However, when you work for yourself, you are responsible for reporting your income and paying self-employment taxes. Over the years, many self-employed individuals accidentally underreported income, reported earnings incorrectly, or failed to file required forms altogether. The result is that some years with substantial income may appear in Social Security records as much lower than they actually were, or they may not appear at all. If you were self-employed during the 1980s, 1990s, or early 2000s, review your Social Security earnings statement and compare it to your tax records from those years. Pay particular attention to the self-employment income reported on your tax returns and compare those figures with what appears in your SSA record. If the numbers don't match, you may be able to correct the issue. The same earnings correction form can be used to request a review. Attach copies of relevant tax documents as evidence and submit them to the SSA. Also remember that self-employment earnings can affect your eligibility for Social Security credits. If you currently earn income through freelancing, ride-share driving, delivery work, consulting, or similar activities, make sure you file the necessary tax forms and pay self-employment taxes. Failing to do so can leave gaps in your earnings history that may reduce future benefits. The fourth situation involves people who continue working after they have already claimed Social Security. This is one of the most overlooked opportunities available to current beneficiaries. Many people assume that once they start collecting benefits, their payment amount is permanently fixed. That is not always true. If you continue working, whether full-time, part-time, or seasonally, your new earnings are still recorded by the SSA. Each year, the SSA compares your latest earnings with the 35 years already used to calculate your benefit. If a newer year is stronger than one of your lower earning years, the weaker year may be replaced. When that happens, your benefit can increase. The SSA is supposed to process these recalculations automatically and apply any increase retroactively after earnings are reported. However, automatic updates do not always occur as quickly as expected. Some people who qualify for higher benefits never see the adjustment reflected in their monthly payment. If you have worked during the last year or two after claiming Social Security and your benefit has not increased, log into your My Social Security account and verify that your recent earnings appear correctly. If the earnings are listed but your payment remains unchanged, contact the SSA and ask whether recalculation has been completed. If the earnings are missing entirely, that could indicate a reporting issue that should be investigated. The fifth and final situation applies to veterans who served on active duty between 1957 and 2001. While this affects a smaller group of people, the impact can still be meaningful. Veterans who served during this period may qualify for special military service wage credits. These credits add extra amounts to the earnings record used by Social Security when calculating benefits. The exact rules depend on the years of service. For many veterans who served between 1978 and 2001, the SSA may add additional credited earnings based on active duty pay. For earlier periods of service, different credit formulas apply. Unfortunately, many veterans never verify whether these credits were properly applied to their records. If you served during these years, log into your Social Security account and review the earnings listed during your military service. If the amounts appear unusually low based on your service history, contact the SSA and specifically ask about military service wage credits. Confirm that all credits you qualify for have been included in your record. Now, let's summarize the checklist you should follow today. First, visit SSA.gov and log into your My Social Security account. Open your earnings record and review every year carefully. Look for years showing zero earnings when you were working and years where the reported amount seems much lower than what you remember earning. Compare those years with any documentation you still have available, including W-2s, tax returns, and pay stubs. If you identify a discrepancy, obtain the appropriate earnings correction form, gather supporting documents, and submit a correction request. If you are currently working and have not seen an increase in benefits recently, contact the SSA and ask whether your most recent earnings have triggered a benefit recalculation. And if you are a veteran who served between 1957 and 2001, make sure you ask specifically about military service wage credits. Remember, your Social Security benefit is based on records that may have been collected over decades from numerous employers, tax filings, and manual data entries. Mistakes happen. Missing earnings happen. Reporting errors happen. The good news is that many of these issues can be corrected, and when they're corrected, the increase to your benefit is often permanent. Subscribe to The Frank American and share this information with someone you know who receives Social Security benefits.